Hello, hello, hello. To get it started, this is the Options Weekly Forecast. We will cover everything you need to know in the options market to trade it effectively and make some money. I'm going to give it a second here just to let everybody filter in. And you guys are waiting for this to get started. I apologize we started a few minutes late, but let's get into it. As soon as everybody gets in here, just give it about 2 seconds. I also wanted to make sure, everybody's getting on. If you could drop your name in the Discord oh my God, drop your Discord name in the YouTube chat so I know who you are. I like to know who's here, who's supporting us, and what's going on. Very much appreciate it. We love you, and we just want to see you make some money. So we're just gonna give this 2 seconds, guys. Let everybody filter in here, and then we get rolling. 266 36. And please drop a like on the video if you like this. That way you'll stay in the know. Make sure you hit the subscribe button, and you will be automatically notified every time we go live. We live trade at least 5 times, not 5 times, but at least 3 to 5 times a week. You do not want to miss it. 3836. Go ahead and hit that bell and subscribe so that you always have that. And if you could, many of you know that I'm in the nonprofit world. I have an organization that helps families struggling with addiction. I put this at the bottom. We're trying to win a local contest that will hopefully give us more exposure to grant funding so we can continue to expand our project. All you have to do is text the code 266 to the number at the bottom. It's 219-402-3836. Costs you nothing, only a second of your time. Voting goes until the 20th of March. It would mean the nearest and dearest to my heart if you guys would take that 2 seconds a day, just pop that vote in. The same damn hospital that makes $250 million a year always takes this award home, and then they get grant funding and all this other money they stuff in their pocket. So it means the world if we can have a chance to win this, and I need you guys to do that. So if you get a chance, make sure you vote. Again, it's scrolling across the bottom. All you do is text code 266 to that number, 219-402-3836, and I will love you forever. I'm going to edit that because there's 2 text 266, and what's the other one? All right, we get started just a second. I just wanted to give everybody at least 5 minutes to get on in here, and then we get going. We got an interesting layout in the options market right now. There's some interesting stuff going on. It's going to be an interesting week to say the least. I really want to see what's going to happen at open tomorrow. I think it will be something that will kind of dictate the rest of the week, at least in my opinion. So we're gonna get this chart pulled up here. You guys are ready to go? Just drop a comment in the chat. Everybody good? Ready? Yeah, and there's 2 codes. If you wouldn't mind sending both those, 764 and 266. I'd love you all forever. Thank you guys so much. Really helps us. We're a nonprofit. 100% of proceeds go towards services offered. No salaries, no nothing. As true as a nonprofit as you can get. And every year we lose to massive hospital corporations, and they get more money. So that's typically how it goes, but not this year because I have you. So again, go ahead. If you're ready, just hit a ready in the chat. And also, before we get started, red or green this week? Let's see it. Were you red or were you green this week? I want to know. So I have a good idea of how we can treat this week, because if everybody was red with this volatility, then that means we need to really work on some risk off strategies that we are obviously not implementing well enough. Thank you, Meta Matt, the guy. You can vote once a day, guys, until the 20th. So if you wouldn't mind taking that 2 seconds a day, that would mean the world to us. Immortal, Mr. Green. Looks like you've had a lot of green, my friend. Red, Shane Wood, red. Greg Green, Gator Green. Justin Green, little pullback, Kayla red. Ooh, a dark green. I like it. Me like it. Nuclearite red. Penguin gray. Didn't have a chance to trade. Yolanda green. Beautiful. I love it. Red on equities, red on leaks, no short options this week. White still recovering. I'm happy to hear that, my friend. No short options this week. I get that. Facebook user, red. Don't know who you are, but I love you and I'm glad you're here. So, red or green? You guys just put that in the chat. Now tell me, was it overall market or was it one play? That's what I'm most interested in. Overall or one play? Which one was it? What killed you? What took you off? Overall market or was it just one play? And you may think that doesn't matter, but I promise you it does. I promise you very, very much it does. So let's hear it. Was it one play or was it just a macro market conditions? You were down 1%. And again, you might wonder, does it matter? But I promise you it does, my friends. Very much so does. So let's see those answers. Come on in. Flood it on in. Today's Sunday the 26th, huh? We got about 7:12, so we're right on time. Okay. All right. Greenhouse and them jam a day green SYTA. Overall green 5 days. I'm still holding. Bad choices, wiping out all the wins. That's a tough one. That's a tough one, my friend. So we need to jump in on the managed risk. Overall's good. Honestly, if it's overall, then that means your portfolio's in good shape. I like seeing the overalls. I don't like seeing the two plays. It's no bueno. So that's good. Okay, we're gonna talk about that. That's good. We'll solve that. We'll solve that issue. We'll at the very least have that information abound so that we know exactly what to do. And so as you can see, I've got the SPY pulled up here. Bada bing, bada boom. I don't know if I like it next. Which one's easier for you to see? Option 1 or option 2? Option 1 or option 2? Which one's better? Which one's clearer, cleaner, crisper? As far as seeing the chart goes. Okay, no help there. Thanks, guys. Option 2. Okay, we'll stick with this then. Well, all right, let's get into it. So we got the S&P, the SPY up right here, right now. We're looking good. We're looking great. We're happy. We're healthy. We're alive, and we have an opportunity to trade. The reason we talk about managing risk is the first and foremost objective that each and one of you should have. It's because it's the most important thing you'll ever do. If you don't have money to trade, you don't have anything to trade. If you don't have money to trade, you have no opportunity. If you don't have opportunity, you don't have profit. If you don't have profit, then what the hell are we even doing here? My job and role here has changed, and it's been interesting to see that I basically just need to come in and be the wrecking ball to remind all of us, including myself, of what we exactly have at stake here and what the intention is for what we're trying to do and accomplish here. If it's one or two plays and it's just this week, that's fine. If it's one or two plays and you find that happening over and over again, then you need to ask yourself, you need to have a quick little sit down. I don't know if you remember when you were little and your parents would, you fucked up and they sit you down at the kitchen table and they say, we need to talk. And your stomach is ripped apart. You're nervous. You don't know what the hell you did. Everything you've ever done wrong is run through your head. That's what we're doing here. If that has happened to you more than once, then it is a pattern and it is a problem. If it's happened to you more than once, then it means it's probably going to happen again unless you directly intervene right here, right now, and you address it. There's absolutely no reason that any loss, any single loss, should put you in that kind of risk. Just absolutely none. Anything that you might be coming up with in your head right now is absolute bullshit. It's the lie you're feeding yourself that's perpetuating this cycle of sickness that is bleeding your portfolio into oblivion. Some of you I talk to on a regular basis, some of you I haven't talked to in a long time, but I will tell you that this one thing that's never changed with me is very clear and firm understanding that managing risk is the only thing that really matters at the end of the day. Read the charts as well as you think you can. Find the best, most, arbitrage options plays. None of it matters if you can't manage risk. So if a 1 or 2 plays are wiping you out for the week, then you need to have a serious sit down to figure out what in the hell you're going to do about it. Because at the end of the day, you're clicking the buy and the sell. It's all on you. No one can swoop in and fix that for you. Now, what you can do is you can go hands off. You could take the week, paper trade. Try to dial in on the problem if you don't know what it is. You could send me a message. Some of the other shot callers, send them a message. That's the point. That's why we're here. When you guys don't ask for help and you just bleed away into oblivion and then you go, you know what, I canceled, I'm done. You screw yourself. And I don't want any of you to do that because we're playing the long game here. And if you really want to be in this for the ride, then it's time to sack up. It's time to saddle up. It's time to stop feeding yourself so many excuses. It's time to stop feeding the world so many excuses. It's nobody's fault. There's no fault to assign. It's just a matter of something's going wrong. And if it matters to you, it's something you should address. It matters to me. And I don't even have anything to do with your money. And I bet for some of you, I care more than you do about your own portfolio. And that's a problem. Even if it's play money, why burn it? You worked for it. Why burn it? So what we're going to do today is we're going to go through this market. We're going to do what we usually do the dance, map out the SPY. We're going to look at a couple opportunities that we have sitting for us on the horizon. But you're also going to hear some very hard truths, and it may not apply to all of you, but it's always something good to hear because at the end of the day, the worst thing for me to do is sit idly by and watch you guys fade away into nothingness. You disappear. I don't hear from you for a while. It turns out you're done trading or blah, 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 or I'm just going to trade on my own. And then they come back and they've lost more money. And it's like, well, shit, now I'm only trading with $100. There ain't much we could do there. So if you have a couple grand in that account or even a couple hundred in that account, you need to treat that preciously. Pretend that money is your children. Protect it at all costs. It doesn't mean you take no risk. It doesn't mean risk is always off the table. It means that you need to take this seriously. That you need to give a shit enough about yourself to actually change something. Because if this has gone on again and again, or even two agains, if you can even say again twice, that this has gone on twice again and again, then it's a problem and it's a pattern. And the question is, what are you willing to do about it? So now's my opportunity to hear from you. For those of you that said red and you also said 1 or 2 plays, is this the first time or is it an again for you? Let's see if we can practice some rigorous honesty here because it's the only way forward in life, period. The only way out is through. So is this a one-off thing? Couple of bad trades? Maybe a little bit of envy, fear, greed? Or is this an again? Because if it's an again, like I said, this is your inflection point. Something changes now, or you keep doing the same shit over and over and over again, miserable as all hell because you're liquidating your cash. You work hard for that money and you're just burning it and then going, I hate this, or I'm so stupid, which isn't true. That's not true. You're not too stupid. That's the irony with this stuff. It's ignorance. It's not stupidity. It's not a lack of ability. It's not a lack of capability. It's ignorance. You didn't know. Some of you might have been doing this over and over again, losing money and then putting more money back in, losing money, putting more money back in, or having a big win that kind of brings some back. Then you lose it again. And maybe it's not until now that you've realized this is a problem. I doubt that because you're smart people. And what do smart people do is they identify problems and they solve them. At the very least, they identify the pattern. And if you'll notice in your life that if you find yourself losing in your trades and you see this money liquidating and you don't want to look at your account as much, and then all of a sudden you're manifesting anxiety and really anguish and shame and blame and guilt and all these other areas of your life, it's because of this. Or those things are feeding into this. Either way, you can't detach them. As I've said it many times again, you could be the best trader in the world, but if you're not emotionally sound, if you don't know yourself, it doesn't matter. I've never met anyone, really, honestly. I've met a single person that truly thrives at this consistently that hasn't sat down with the darkest parts of themselves. That's what makes the difference. Courage. That courage is a simple choice, a very simple one. Am I willing to look at something I don't like? Am I willing to admit that this shit is my fault? That there's no one else to blame, that I did this to myself and it feels terrible? That's how you'll know if you're ready to change. That's how you know if you're ready to be wealthy. I mean, that's the truth. I've gone from literally living in my broke as hell, hiding out in my car because I couldn't even go to job interviews anymore while I'm spending part time in my parents' basement, to making more money than I ever had, to barely wondering if I could pay my mortgage, to then making more money than I ever thought I'd have. And I'll tell you one thing, wealth is something you better be prepared for. And as stupid as it is, as much as I hate like that whole manifest woo woo bullshit, there is a mindset to it. And if you're always coming from the place of I'm not enough, which, if you've experienced this pattern over and over again of these singular losses wiping out a whole week's worth of gains and hard work, it's because you don't actually believe you deserve it. You can lie to me and say you do, but you don't. That's just the truth. Because if you did, you wouldn't be in this position. If you did and this happened, it was a one-off thing. The truth is, and this is something to take, I've experienced it at the very least. We give ourselves exactly what we think we deserve. No less, no more, exactly what we think we deserve. So if you're giving yourself shit, stop. Sometimes it's that simple. It's just stop. For you, more than likely, what it means is you need to just stop gambling for a minute. You need to be paper trading for a month. You need to get into PBU and sit through every one of those classes as much as you tell yourself, I know all this. I don't need to do this. I'm beyond this. I'm better than this. Clearly, you're not. And I say that because I've been in the exact same position before. Clearly, I wasn't. The smartest people I've ever met in business, in trading, in real estate, in anything, they're always willing to learn. They're always willing to keep their mouth shut. They want to be the dumbest person in the room because there's nothing but upside from there. So if you can sit down and look at this for what it really is, a couple of simple decisions that have gone wrong, that have led to losses in your portfolio, it's not permanent, it's fixable. Because truth be told, you probably just never really addressed the problem in the right way, which means you never got into the solution. If you never got into the solution, then of course nothing changed. You might have one win, maybe another win, and then a bunch of losses, and then one or two more wins, and then a bunch of losses. And then you're doing the hodling bullshit and all that other stuff. Stop. Just stop. Slow down. Humility is an honest relationship with reality, the truth. Tell yourself the truth. It starts often by telling other people the truth, because I don't really believe it until it's out of my mouth and I've said it. When you can tell other people the truth, you're probably being pretty honest with yourself. It's always inside out. If you want to succeed doing this, then give yourself exactly what you deserve. And you can be the one to decide that, but only if you sit down and figure out the truth. There's no excuse for this to happen every week, and I hope I don't see it happen again. And if it does, I hope you have the courage to say something so that we can address it. But there's no reason it has to continue unless you want it to, or unless you're not willing to do what's needed to make it stop. Either way, your fate is in your hands. The control is yours. The answer isn't to quit. The answer isn't to, well, I'm just going to go trade on my own, or I'm just going to go do this, or I'm just going to, buy dividend stocks. No. You're here because you know this is the best possible way to trade. You know that swing trading, day trading, like active trading is the way to, like, if you really want to make some money and you really want to change your life and free up your time, because then you're just feeding that money into the long-term stuff. So let's just figure out how to give you what it is you initially wanted when you started this journey. because you've forgotten, and that's okay. But we need to figure that out. So let's get started. We've got the SPY here. And for those of you that joined late, shoot those two codes over to that number. Just send 764 and 266. Text that over 219-402-3836. It's free. It takes 2 seconds of your time. If you wouldn't mind, do that every day for the next 20 days, and you will be helping a nonprofit literally help families no longer have to bury their children. All funds and proceeds. It doesn't require any donation. It's a local contest that we're just trying to win, which will get us a lot of press and exposure so that hopefully we can get some grant funding. That's it, and that's all. So what we've got here is very interesting. Here's the SPY. We're going to the weekly because we don't really care about the daily. We've got these two ranges identified. I cleaned up this chart a little bit to make it a little more simple because we need simplicity right now more than ever. We're right at about somebody do me a favor, send me a DM if you wouldn't mind time stamping this for me. 21 minutes. Just send me 21 minutes SPY. And if we go through another ticker, just send me whatever the time is and then the ticker, and I love you forever. Okay. So we've got the S&P here. We're looking on the weekly chart. We had a lot of volatility over the past couple of weeks, dated back to the end of 2021. So basically the new year opened with a bang, and by a bang, I mean downside. We had a nice little dead cat bounce. We popped up. We tested the most recent high we've seen in weeks at 457, and then we sank to oblivion. We came back up again and we tested 428, key resistance at $430. We didn't even test it. Then we came back down to a low of 346. Now, the question on everyone's mind is that the low? Is that it? Is this where it'll end? Will it ever go back there? That's a wonderful question. And we're going to discuss that exact question in depth here in just a minute. So this week, we tried hanging on, right? We've got pretty strong bullish momentum starting in week 1 of January, right? Price action pushed up. We hit against resistance. We came down for a moment, and then the bulls picked it back up, taking it to size 418. We traded this whole leg up. We called those options. I believe we were looking at the 410 and then the 410 and 413 calls. We traded those a couple 100% if you traded them. We hit our top. We talked about 420 being the top. It ended up being 419 and change. That's okay. And we came down and we retested this descending resistance that has become descending support right here, which we nailed that as well. On last week's stream, we talked about breaking 400 to the downside, more than likely hitting 398 for those of you that don't recall. Absolutely nailed it. I love it. Now we are in an interesting position. We've got a range right here, which I would argue is a well-defined support based on the price action we can see here. We even almost closed this gap right there, but we didn't. So the question is, when looking at these ranges, where's that? Yep. The question is, when looking at these, is the past going to repeat itself? This is the area we're looking at, okay? This was back in March of 2021. We pushed up 415. We came down about 387, 390. And then we pushed up the initial breakout. We came back down for one more support test right here before we blew up and hit our all-time high. So where are we now? Well, we haven't pushed a new high since this relative high, but we've also started to consolidate in this upper channel here, which we've labeled as range 4. Got range 3 right below it. In my opinion, these are the two most likely ranges for this to trade in. If you look at them as one range, it's an extremely likely probability that they are going to continue trading in that range. However, we've found that we've bottomed out here, trending along this descending support. Okay, we've got an ascending support right here, going off the bottom of that sell side, and that's a low price low right there. We still haven't touched it yet, which means we still have some downside to go. Now, if we do, what we want to see happen, as we've talked about in many, many posts in the Discord, and if you're not trading with us live in Discord, you are missing out, my friends. If you'd like to somebody dropped the link to the website if they want to get signed up and get on that premium live so you could have this kind of analysis day in, day out. This will make you a killing. We talked about the SPY picking up right here at our inflection point and then pushing back up. Can we shift trend? That's the question everyone's wondering right now. Can we shift trend? What do you guys think? Are we going to shift trend? Leave your answers in the chat. Yes or no, yay or nay. And then I'm going to tell you what I think. But I want to see where your heads are at. Do we shift trend here? Broken up. Now we're trending back down across this descending support. Do we get picked up by this ascending support here and enter a bullish pattern? I want to see your guys' thoughts, your answers. Come on, there's like 50, 60, 70 here. Let's see some answers. Blast in there. And you damn well better have hit that like button. Oh my God, I almost closed this on accident, but I didn't. Okay, so we got some opinions. I like this. So Chris said no. Brian says no. Kayla says too much bad sentiment for me to think up from here. I can see that. I think we trade sideways before going up. That's an interesting opinion. I like that. Devastator very succinctly says, no, we go into 380. I like that. The man's got a plan. The man's got conviction. Conviction, he says. We're going to 380. I don't want to hear any more about it. It's like when your dad's yelling when the kids are in the car. Shut up! We're going to 380. I don't want to hear another word about it. We're not going to Denny's. We'll know until tomorrow. That's an answer. I like that. This man knows what I'm about. And there it is. Smart man. Nobody knows. That's why we need a plan for both ways. Nailed it. Nailed it. I absolutely love it. And for those of you guys that support us, thank you so much. For those of you that shared the link out, thank you. It means the world when you guys post us on your personal pages and share the wealth. There are tons of people in your life that would greatly benefit and are interested in this, and I appreciate you guys being the ones to share it to them. That's an honor for me, and it's, in my opinion, the greatest trust anyone could bestow upon you is a good referral. So, yo, what's up, guy? What's up, Mr. Coin? Senator Coin? I think that guy's going to become a Bitcoin one day. He's just going to start trading. He's going to become the trade. So, sorry, I just need to slow it down for a minute. We need to let all the. It's funny with these streams when you watch the number. It's like there's about 50 of us that are here, that are committed, that are going to get into this, that are sticking around, and then you always get like 10 or 15 that are in and outs. Just pop in, pop out. Sometimes I like to wait them out. Because if you leave here, you're making a critical mistake for your life. So now that we've got your answers, I would say that that's about 50-50 in votes. Actually, no, I'd say we're leaning more towards no. We're going downside. But as my dear friend says, we won't know until tomorrow. And that's why we need to plan for both ways. I think it's possible that we could turn over and take trend up. Is it likely? No. But is it possible? Yes. So that's the two opposing sides to this equation, right? Is do we fail to pick up support and break trend and continue downward, or maintain trend and continue downward? Or do we break trend and pick up? So now, in order to do that, we need to be a little bit more dialed in. As you can see, we're now on the hourly, right? And we built our rectangular box, right, to understand what these price ranges are. So for those of you that are trading options, this is something you should absolutely know how to do, because this is how you identify your strikes. This is how you know what range you need to trade. And honestly, it can help aid in your expiration. So as we drew this out, now we dial it in on the more near-term price action and look at how accurate it was. We have seen support come in right around here, 1, 2, even I would argue 3, 4, before it fell off, came back and became resistance. Resistance, resistance, then support, 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 then resistance, resistance, not just kidding, support. And now we've got a support bounce here, but let's look at the color of that, right? So we had RSI of about 16 back when. We were trading about 398. We're only oversold to about 20, but we're trading significantly lower. What does that mean? Let's hear it. What does that mean? RSI isn't as low as it previously was, but price is lower. What does that tell you? Well, come on. What does that tell you, my friends? RSI isn't as low. Price is lower. Let's see if Mr. There you go. That's the answer. And that's true. Because this is a very simple concept that if you're even touching options, if you don't know this, you should be punching yourself in the face right now. And then you apologize to yourself, give yourself a nice little love pat, and then get your ass in PBU and start figuring it out, because that's the truth. It's all ready and available. You willingly choose not to know it. I love you, Justin. I didn't mean to call you out. Just sometimes we need a little tough love. You know what I'm saying? So, a few of you gave some answers. Let's see if Mr. Bitcoin J here. Let's see what he says. Mr. Technical, what do you think? What are you telling me? What are you seeing there? If he doesn't answer, then we're just going to boot him from the stream. He's got to go. What do you think? So it's not hitting a new high. Yeah, Jay, we're talking about this hourly chart. We've got new low in price, but RSI didn't come nearly as low as it did previously. RSI, we got new low, checked in at 393, RSI at 21, but just a few days prior, we had new low at 398, but RSI checked down to about 14, extremely oversold. So what does that say to us? Price went lower, but it's not as oversold. Let's see if we can find a past occurrence of this. Maybe learn in the moment. So right here, we had price trading at 408. We had RSI down to about 24, 25. No, but it didn't create a new low, did it? Yep, it did right here. No, but RSI, that's not a good example. Oh my God. So what that tells us, guys, is something very interesting here. Someone said hidden bullish divergence. I think that's actually an interesting idea, but price could not find a new low. RSI found a new low. However, price did not right here. And then we pushed lower and price found a new low, but RSI didn't push down as hard. Interesting. So one thing to keep in mind here with looking at stuff like this. Price reached a new low. Important. Regardless of what the RSI does, price is always king and price always matters first. That's your number one indicator of anything at any time, at any moment, that you need to pay 100% attention to. What you also need to recognize is, was it buy side or sell side? Because yes, that matters. People get so caught up in the RSI and all these other bullshit. Like, it's bullshit. Who cares? Look at the price action. If you can't read the price action, then you need to be watching this stream, taking notes every single week, mapping this out right along with us so you know exactly how to trade the week. Because that is the only thing that's going to protect you from getting destroyed. So right here, what we're seeing is like everyone looking at this hourly chart saying, we're getting bullish engulfing. We started bearish, but now we're starting to get bullish engulfing. This is great. Yeah, we can't sustain price above a significant resistance. So not only can we not sustain price above significant resistance, we are seeing strong sell side volume. RSI is not even coming close to touching previous day. We found a new low, but again, it was an after hours. So how much credence you? Oh, no. It was at open. So at open, it dumped, right? New low in price, but not new low in RSI. So where many will say that they think of divergence, right? I say who gives a shit? Doesn't matter. Watch price. Because no, it doesn't mean it's coming up. No, it doesn't mean it's going down. But what it does mean is, oh, there you go. Somebody said it. Boom. That is exactly it. The intensity is not as strong, meaning the pressure to the downside was not as volatile as it was right here. Which means this could have been massive volume exchange. That could have been price momentum is a better way that I'd describe it, right? So the velocity of the price, the momentum of the price did not go down in such a fashion that it would trigger the RSI to go that low. But what is happening still, nevertheless, is significantly more outflow volume is coming through. And that's what matters. Because when you're trying to think of how this market works, you're probably already wrong because there's no way to understand it. All you can do is take these little bits and pieces and put together as much of the puzzle as you possibly can, and then make sure that you're prepared for both outcomes. Institutions and or money, mostly market makers, very likely are trying to lowly and they're trying to be what the fuck is the word? I can't think of the word. Nimble as a thimble. In dumping volume and or shorting into what was likely significant demand because we were in a demand zone. In the past, we need to understand, is this a demand zone or supply zone? That's why these lines are marked. When the SPY crossed this line right here at about 397, this became demand zone. In past occurrences, this has been a significant demand zone, meaning look at how quickly price moves up and down through this area. And when it does come down, like it did right here, it immediately rips back up. Why? Because most of this is programmatic trading by large institutions, and they have their bots set to start scraping up these what they consider to be bottom dollar buys. However, from a macroeconomic perspective, I would say that we're in a much different market now than we were on January 1st. I think the writing's been written on the wall, but I think it's becoming a little bit clearer to everyone. We got real estate numbers back. Demand was lower and price per sale was lower, and interest rates are going up. So people's purchasing power is coming down while price is now also coming down, which means people are going to be less willing to sell their homes, more desperate, either or, which means that we don't have the best strength right now. And honestly, it's mostly politics and confidence. You got to remember too, we're coming up on a big election. They're not going to boast bullish confidence in a market right now, in my opinion. I think they're more than likely going to be trying to set up a bull trap here. That is the most likely based on the way this tape looked. This is either a significant bull trap or there was significant enough demand to hold this sell pressure up. That's what I'm hoping this is. Now, here's how we're going to trade those two scenarios. So that's what you need to map right now. So you need to write that out. Write number one and then number two. Bull trap, bear trap. Those are the only two things you need written down right now. Scenario one is we're going to discuss if this is a bull trap, how do we trade it? Scenario number two, if this is bearish price action. Oh, wait, sorry. Am I mixing these up in my head? No. Number one, if it's a bull trap, how are we going to trade it? Meaning it's going to go bearish. Number two, the bears are not taking over. And this is going to rip back up. And this still is a demand zone. And there was enough liquidity that came in and scooped up that sell side that we don't have to worry about sustaining price below this point, even though we couldn't push above it again almost the whole session and hold. Those are the two. So, number one, if this is a bull trap and we're heading downward, what do we need to look for? Well, this part's very simple. If we can't sustain, and I would break this down into 30-minute candles when the trading session opens. If we can't sustain a close above 397.50, I don't think this is going to hold up. So that's your first price point to mark, 397.50. If we can't sustain and close one of these 30-minute candles above that 397.50, I don't think this is going to hold up. Now, maybe it closes slightly below and the next one pushes above and closes above. Then we're looking bullish, and we could test as high, honestly, as 405 plus. I would say we're more than likely going to have a tough time with 400, big psychological resistance that many people are waiting for, and 402. So, for example, if those candles were to close above that 397.50, say they close at 398, then we can start looking at 402 calls, not today expiration, a month from now expiration. Don't be an idiot. Do not be greedy. Take the smart trade, the managed risk trade, make your money, get it, and go home. If it doesn't hold above 400, that's option 2. We stay below 396, 397, call it. So we stay below 397, this thing's coming down. So just to recap, that first scenario, this is the bull. Oh my God, I've fucking mixed these up. We're just going to do bull and bear. I'm sorry. I just have totally mixed those up. Bullish scenario number 1. Scenario number 1, which is bullish. Price opens up. Have your chart on the 30-minute. Watch a 30-minute or more candle close above 397.50. If that happens, we are probably going to see continuation to the upside. Probably first target 401. If that does not happen, and for instance, we push up like we did right here, and we push up even to like 399 right before open, we are going to sink back into oblivion, more than likely. So the bullish situation is a candle close above 397.50. Keep your chart on the 30-minute or more. I don't care. I don't want to see a single one of you post a chart on a 1-minute chart ever, or I'll scream. It's stupid. Don't do it. It doesn't help you. It's bullshit. You are not going to be good. If you still are struggling, I'm telling you right now, if you continue to try to look at the 1 minute, 5 minute, 3 minute, you are going to kill yourself trading. You're going to burn that portfolio to the ground because you are going to be faked out left and right and have no idea what's going on because it's too much, too fast. It's too hard to trade for those of you that don't have the years and years of experience. If you do, by all means. But what I'm talking about here is I would keep it on the 30-minute or greater. Ideally 30 minutes, your best case scenario. You want to see that first candle close on a strong push it open above 397.50. If it does not, we are probably coming back down. Give that second candle a chance to play out because that second candle might be the push above. But if that does not occur, we are trading to downside. We're not pretending. We're not hoping. We're not doing any of that. We're just trading this the right way so that you can make money. Because at the end of the day, make money. I'm sorry, dude. I'm sorry for cussing. I'll do my best not to cuss again. Don't cuss, kids. It's terrible. It's natural. But I've been working on that lately to try and do it less. So my apologies, man. I'm sorry. Yeah, my bad. I feel bad now. But nevertheless, I hope he heard my lesson. At least he's starting young. He already knows the deal. So, son or daughter, keep your dad accountable. If that 30-minute doesn't close above 397.50, go ahead and you punch him square in the you know where. If you're trading calls and that doesn't happen. So, what's the price we're watching for tomorrow? What do we want to see that 37.50 that 30-minute candle close over? Come on, type it. I know you guys know numbers. Let's type those out. What do we want to see that close over? If we're talking a bullish scenario, what do we need that 30-minute candle to close over? Come on, people. What's that price point? Yolanda for the win. Well, I guess a bunch of you typed it, but I'm going to give Yolanda the credit. 39, 397.50. Alejandro, my friend. No. 397.50. Not 395. There it is again. Yolanda gets the credit. 397.50. That 30-minute candle needs to close above 39750. That's the ticket, my friends. So now, should that happen, what are we going to do? We talked about the $400 calls. Those would make sense. Do not trade same day. Do not trade next week expiration. You trade a month out. If you're saying they're too expensive, I don't care. Open a spread. They don't have to be that expensive. These are all excuses. I'm trying to just shatter the denial of the excuses that everyone's been making that have led to these losses that I've seen for some people here. We're going to get rid of that right here and right now. And we're going to be very honest with ourselves. And we're going to change together. And we're going to be better than we've ever been before. So, 30-minute candle. We need that to close above 397.50. Watch that second candle. If it's pushing up but doesn't close above it, that's okay. That second candle might. So for instance, you see one candle, a little baby candle like this, it closes at like 397.18. Wait for that second one because it might push up and close above that price. And Abdallah, so what that means is you want to see the candle finish. So if you're watching a chart play out, this is one 30-minute segment in the market. This is another 30-minute segment in the market. So a better way to put it, a more simple way. The market opens at 9:30 Eastern a.m. If by 10 o'clock Eastern, the price on the SPY is not above 397.50, we are probably going bearish. Give it 10, 15 minutes. But if it can't sustain above that price, then it is probably coming down. So scenario one is bullish. And what do we need for that to be bullish? We need to close above 397.50, 397.50. At which point we can look at the 402 calls. If you don't know how to open a spread, ask in the PBU chat. We will show you how. Do not buy same-day expiration options. Do not buy next week expiration options. Do not do any of that and then be shocked. Oh, my God, I don't even know how I lost money this time. I mean, I bought same-day expiration options like at the exact time when he was saying it's the worst time to buy them. And I did the opposite of everything he talked about. But I just don't get it. I just don't think this works. I'm trying to help you. Help me help you. So don't do it. Now, sorry. And now we're going to talk about the bearish scenario, the what if. So say we cannot sustain price on the SPY above $397.50. What do we do? Well, the first thing we do is we're going to watch for this test right here. So we've got this horizontal line going across right here, right? At 396.50, just about. So a dollar less. That, I think, is going to function as our resistance. And should it means it's also going to function as support if we open strong. If we open strong and we break up and we come back down, we need to see a strong support bounce or rejection off of 396.50. So bullish above 397.50. Bearish under 396.50. Meaning, here's the chart. Small. Oh, I fixed it. There you go. Meaning, if we can't hold above $396.50, we're going to explode. Puts, to be safe, I'd go 394. Maybe even 395 because you can make good money. Same deal. Do not buy same day expiration. Do not buy next week expiration. Give them at least 3 weeks. If they're too expensive for you, open a vertical spread, which means you buy, like, for example, you buy a $395 put, you sell a $394 put. Lowers your cost. Perfect. If you don't know how to do that, all you have to do is go to the Discord. If you're not in it already, I'll post the link. You go into, if you're already in premium, you already know it's the PBU chat, or just tag an admin or DM me or do any of those things. Do all of them. I don't care. And just ask and we'll help. We've made videos on the stuff. We've got guides on the stuff. We'll help you. There is no single day of trading. This is probably the most important thing I'll say this whole time. There is no single, yes, this is the most important thing I'm going to say to you for this entire stream. So everyone, take a deep breath. Do it with me now. Just take a deep breath. Close your eyes. I need you to just hear this statement because this is the most important thing I'm going to say this whole time. There is no single trading day that will make or break your career. It's that simple. There is no single trading day that will make or break your career in trading, meaning you're not going to miss the play that changes everything. Does that make sense? So if you don't know what a spread is, but you want to trade options, don't trade options tomorrow until you learn what a spread is and how to use it. If you're not understanding what I'm saying, that's fine. That's why we built an entire education course to teach you all this stuff that you do at your own pace. It's all recorded. Do it at your own pace. You're not going to miss anything this week that's never going to happen again. We have made money for 3 years in a row, week in, week out. We've had some bad weeks, absolutely. Some great weeks, absolutely. But the name of the game is consistency and time in the game. The nature of this whole game is staying in it. So when you lie to yourself and say, I can't miss today, that's just doing, like, honestly, it's just addictive behavior. I'll just say it what it is. And I think I would know. So you got to put the beast back in the cage when you start fiending for a trade. You're really just looking for something emotionally, looking for the dopamine shot. Someone said something earlier. I think it was it John? Why does it feel the same? Why does a win feel the same as a loss? Nothing anyone's ever said here has hit me more. It's the same. It's the same result internally. That's why traders keep trading, keep trading, keep trading. They have to have an outcome, even if it's a loss. What people don't realize is they want to lose. Not that they want to lose. If they could pick win or lose, they still choose to lose because it's too hard to win. It's really not. It just takes some discipline and self-honesty. But in that moment, it's easier to just take the loss. At least then you get something. And you may be thinking, oh, that's crazy. Well, I don't want that. Why would it be getting? Then why does it keep happening? You have all the tools to make it not happen, yet it still happens. So you tell me why it's still happening. Truth is, it's not as hard as it looks. But in practice, to ourselves, we are harder than it looks. We make it harder than it has to be. That's just who we are. We're people. It is what it is. And that's everyone. No one's different. No one's more special, less special. It's just what it is. But if you're genuinely struggling, then we're going to help you figure it out. Don't quit before the miracle happens. I've seen some traders that literally changed everything in one day, and not one big trade. I'm saying they changed everything about how they trade in one day. And all of a sudden they were great. That's fire, dude. I love that. That's a phenomenal example. You got a couple wins in a day and you have the temptation to jump into another trade. Paper trade the rest of the day, man. Treat it like a video game. I love that. He's not willing to give away his gains because he's got little kids, man. Some of us have a lot on the line. We all do. But at the end of the day, it doesn't matter. Why would you want to give it back? Why do you want to do that? You work so hard to build it. Why do you let it just fall apart? That's why I couldn't be more grateful for getting sober, because it changed it's the way I operate now. So it's impossible not to look at trading. It's impossible not to look at the way I am and the things I do and what I see and what I think. It's impossible not to. So I can no longer feed myself those lies. I can no longer feed myself that line of BS that, it's somebody else's fault when these losses are adding up. Paper trading is the smartest thing you could ever do. Again, I tell the story of Evan, a good friend of mine who I know in real life. Self-admitted, he's never the brightest guy with stocks, didn't know shit about it, didn't know anything about finance or money. He listened to me. He paper traded for an entire month. He wakes up, he goes to work, he takes his lunch break at 8:30, right when the market opens. He trades for a half hour, usually makes about $250 a trade, and he cashes out, and he's done for the day. I watched that guy turn 400 into about 8,500 bucks in about 2 months. Then he took the money out and put it towards his house. He was about to have another baby. Then he did it again. So to date, he put in 400 bucks to start, and he turned that into 7-8 grand twice, I believe. He literally created like $14,000 out of thin air for a few hours of time a month. Why? Because he listened to because he knew me in real life. He's seen me do it. So what did he do? He listened. He paper traded for an entire month. He didn't chase gains and do all that, dope fiend stuff. He just listened, paper traded, did it right, got disciplined, and all of a sudden he's making money. So if you're ready to do something different, make sure you're in PBU, make sure you have premium access, so you have this analysis, you have these live streams, you have the alerts, and paper trade them. And lose. And then sit down with us and figure out what happened. The best trades are the ones where everyone else won, but you lost. Want to know why? Because it's very easy to identify what went wrong, what happened, and how to make it never happen again. But if you keep your mouth shut, you don't say anything, you don't come to anyone, you don't say anything about it, you pretend it didn't happen or blame somebody else, nothing changes. So, to recap, I think we can become bullish if SPY can break up within the first 30 minutes of after opening. If it can hold above $397.50, $397.50, I think we can see some bullish movement. I don't think that's the most likely outcome, but it's possible to then push back up to $400. If SPY cannot sustain above $396.50, meaning if SPY can't hold above $396.50, we are bearish more than likely, and we are going to come down to at least $395. I'm looking at $395 puts dated April expiration or end of March expiration. If you don't know how to create a debit spread, you need to. Do not trade this until you know how to do that. There's no shame in asking a question to learn. Those are our two scenarios. That's the SPY. I don't really see much else happening unless it just straight up trades sideways right in between like 397 and 395.15. And if it does, there's not much to trade there anyway. And I wouldn't waste the time, effort, or money trading there when there's other opportunities that are far better. So that's the SPY. That's what we need to know. Very quickly, we're going to run through these. Netflix came down bearish as all hell, but strong demand came in near the close. Significant volume. I really think this has to hold here at 315. If we can't hold on Netflix, if we can't hold 3915, I just closed the short, just so for those of you that are in the alert. As I told you, if we ever revisited 316, I was going to close that short, continue to hold the long, and then wait to see if I'm going to close the position altogether or not. That short made another 38% on the way down, bringing our net total return on this trade to 63%. The long is currently down about 8%, so that puts us at about 55%, give or take, net total on that trade. I'm willing to let the long go down another 10%, at which point we'll be at a net positive 45% on this trade, even and with most of those gains coming from the short side. So let's dial back here. This is why I want to keep a very close eye on this Netflix trade, because we're bottoming we're hitting this channel perfectly. So as you can see here, we've mapped this one out. This is one of our best trades of the year, in my opinion, as far as it being safe, pragmatic, and it just making sense. We, in my opinion, absolutely nailed this Netflix trade. So for the sake of all of you that have been hearing us incessantly talk about range trading, this is exactly why. Topped out, boom, bottom of range. Look how easy of a trade that is. Look how easy of a short or put trade that is, from $300 down to $250 every time. It's a $50 move. That's a huge option swing. And then guess what? If it holds there, that's a huge trade to the upside back to 310. And then guess what? If it doesn't break up again, it comes back down. Huge trade down to 275. This $25 move each time. Minimum 100% on those options if you're trading within 3 weeks out. It's done that 3-4 times. So we've been adding the short every time we top out. If it continues to break up, then we close the short, but it hasn't until right about here. And when I saw this day, we touched 379.43. Those calls were up like 80%. So that was your opportunity to take profit. If you didn't, that's okay. As long as you added the short. Otherwise, you're back down to break even, which I hope you're not. This inverted hammer to the upside is no good. It means bulls really lost steam. Bears came in, trounced them. We had another high opening day, sold off throughout the day. I knew this was the oblivion point. So this is when I added the short. And we just all the way back down to the bottom of our trend channel. So we're good here. As long as this can hold, we're golden. You can close the short and we can continue moving. If it doesn't hold, more than likely we're going to come back down to 275, at which point my stop loss will be right about here on the long calls. Because, like I said, I'm not willing to go below a positive 45% overall on the trade. I'm just not willing to give up the gains. We're looking at about 313 and change, 314 as our stop point, meaning if we can't hold here, and it moved pretty quickly through that zone, but it tends to. If we can't see a quick bounce up and consolidation to the upside, then we're just done here until we probably revisit 278 and change, maybe even low side 275, at which point then we'll investigate another position. So that's Netflix for those of you that are in it. I just wanted to run through a couple of the big trades we've been following along. Shopify beaten to an absolute pulp after pushing up to 54.67. This one was a 200% runner trade twice. You had two different opportunities to take 200% on these leaps. I hope to God you did. If you didn't, please God, I hope you added the short. We've come down here and we're really not shaped up looking that good right now. If we're being very honest, let's go to the weekly. We had some huge sell pressure here. Basically, people are starting to take a look at this and say, hey, I really like the underlying business, but the valuation is just making no sense. And so buyers are leaving the market, which is no good. Really no good. I love Shopify from a long-term standpoint. I think it's a very interesting model. I think that they've really captured a large segment of the market, and I think that they're going to continue to thrive. However, their stock price may not reflect those beliefs and ideals. So we touched up here and we held on what I'm hoping will form an ascending support. If it did, then we're in a decent position. This is bottom of channel and this will push back up. More than likely, it's not going to, and we're not in a great spot, although RSI did hold up. So higher, low, and then lower, low, right? So we're seeing confirmation of the upside, continuation, if you will, meaning if you could look right here, we found our new low, new relative low right here at about $32. RSI came down about 44. We found our new relative low here at about $40, and RSI only came down to about 49, so touching just above 50, which that tells us that we're still in confirmation of uptrend as long as this holds. So Shopify should still be good if you're still holding equity. You're still up, 30% plus. I'm still going to say that I'm a hold on this one as long as we can maintain trend here. If we cannot, then I'm done and I'm out and it's over. Other than that, a few interesting opportunities in the market. NVIDIA is another trade that we have. This one is just absolutely booming on the weekly. As you can see here, we've got a very strong uptrend. We've got some ridiculous bullish engulfing here. They're really capitalizing well on a lot of cloud-based news, a lot of the chat GPT news and all the other nonsense. They're really, really capitalizing here, and they're really moving the needle in doing so. I think we're going to test previous support. I think is going to become our resistance. I think we could test as high as 250 plus. That puts our calls in the money, by the way, which means you should absolutely take profit if you haven't already. You're already up like I think 70, 80% from the highest entry we had. For those of you that were patient and waited or cost average down, you are up at minimum 300% right now. Take profit, cash in. You made the money. Take it home. There will be more trades. I can't stress that enough. And then last but not least, PayPal. Very interesting one. This one is playing out perfectly here. Again, we took that trade break above 69. We took it almost to $90. Phenomenal trade. I think we're going to get another opportunity here. I want to see this come down and ideally test $70. If it does, in my opinion, that's a buy the farm position trade with a firm stop in place at about 5 to 10%. And then you can trade this back up to $102. Either it comes down 5-10% and you lose, or it goes up another 40-50% and you win. Either way, fixed risk, you know exactly what you're going to lose. Make sure you cater to it appropriately. Do not put your whole portfolio in one play, as you know. But I think that could be a smart trade in the range that we have laid out in front of us. This one absolutely boomed. This was our stock swing of the week that we picked last week, Navos Maritime NM. We saw this curling up here on the chart. Remember, we put this line here. We talked about a break above 210, and this thing was golden. As you can see, it is golden, and it is going. It touches as high as 273. I think we could see this go to about 340 if we're lucky. Firm stop in place. Remember to trade this smart. We talked about how this thing just likes to stair step up, given that it has a low float, and I think it could do just that. It moved significantly stronger in after hours. As you can see here, the daily chart gives you the best picture. We are curling with strength here. We broke above all mean resistance, which means we're going to test the bottom of this range at about $3, possibly as high as about 345. So that was our swing of the week from last week, and we're just going to continue with that one on continuation because I think it looks fantastic. It was a great trade. I'm glad it made you guys some money. I hope you're able to take it. And other than that, that's about it. I guess last but not least, any questions? I've seen a lot of people have filtered out here. Any of you have any questions, thoughts, concerns, comments, criticisms, ideas, beliefs, recent dreams you had that were weird? Anything you'd like to share? Would you like any relationship advice? I've always wished I was a mid-40s, mid-50s woman that wrote for a relationship column. That's kind of my dream. I would love that. Just sharing some thoughts with you. So anything at all, let's hear it. I want to hear from you. And while you're typing those out, I just wanted to say a sincerest thanks to all of you. 40, 50 of you give, an hour and a half of your time every week. I very much so appreciate it. You guys are the best. There's a reason that our community withstood the greatest the greatest destruction of the retail trader that has ever occurred, because never before had so many retail traders been invested in the market. Every other business like ours, right, group like ours, folded because, number one, they shouldn't have ever had it in the first place. It was like two idiot traders that got lucky during COVID, and that was it. We put together a professional team. I did. I made sure to, because I didn't think I could carry the weight by myself. And luckily, I have wonderful traders here doing great work. But we survived one of the most difficult markets, and I kid you not, you guys. I've talked to my advisor who's been in this for 40 years. He said that 2022 was one of his most difficult years he's ever had in the market. So I want you to take a second and think about that. As somebody that's been doing this professionally, managing other people's money for 40 years, and he said that 2022 is one of the most difficult markets for him ever because nobody knew what to do. The time for the active trader is now. Buy and hold investing is it's dead. You can't rely on it. You just can't. You got to know what you're doing to manage these markets. In my opinion, it'll never work. Let's trade with 15, 20 million. You could rely on those 4% bond yields. Absolutely. But most of us don't have 10 million in the market. So we need to make it work. But know that an investor with 40 years experience said that 2022 was one of the, I wanted this on camera so you could see it from my face. My advisor has been doing this for 20 plus. No, he's 40 plus. How old is he? 65. He's been doing this about 40 years, since his 20s. He said that 2022 was the single most difficult market he's ever traded. The single most difficult market to help his clients through, and the most difficult market he's ever seen. So if you survived it and you made it and you quit now, you're selling yourself short. And I hope you don't. Jared Daniel, great question. Of course, I got an answer for you. Transitioning soon from paper trading for months to get back into real money. Advice on that. First of all, send me a message on Discord at Big Quench. It's at the bottom. I think it should show up once I get rid of this. Yeah, right there. Let's look at what your week over week consistent returns are. I mean, if you're managed for the last 6 weeks, week over week, positive net return, week over week, right on, get back in it. And just make sure you have that trading plan mapped out of exactly how you did it. If you haven't done it yet, you're still red, or you're still seeing too much inconsistency, don't do it. There's no rush. We're actively trading. That's what I hope you guys realize. Who cares what the market's doing? It doesn't matter for us because we're trading upside and downside. The only thing that would suck for us, but even then, no, Bull has absolutely crushed it on the spreads. There is nothing in this market that you cannot profiteer and maximize on because we're trading every facet of the market. That's why I've built the team that I've built. You have the swing traders, you have the long-term growth equity guys, you have the active trader and Amy, the day trading, you have Jay on the crypto side, you have myself doing a bit of the long-term and the spreads. You literally can capitalize on upside, downside, sideways trading, premium arbitrage, the crypto market, long-term equity growth. You get everything because we do all of it. You'll never miss out on anything. So do not rush into it. That's what I would say. I need to learn spreads. Absolutely get into PBU. We teach you all of that. If you're not in it, then you need to be. It's the best place you could be. Rogue Exotic, of course, man. My wife doesn't like it, but I love it. But she also supports me because she's a wonderful woman. Should we measure our wins or losses on a daily or weekly basis? Personally, I mean, you can't not look on the day-to-day basis, but I would always zoom out and look at month over month. Like if you just started here, if you just got in the premium section, you need to give it 6 months or you're going to absolutely screw yourself. And what you need to see is what kind of improvement did I see in months 4 and 5 and 6 that I didn't see in months 1, 2, and 3? Everyone's so short-sighted when it comes to this stuff. They think, well, I paid for a year. I need to make it all back. And what? No, you're getting multiple $1,000s of education for not even close to that. That is literally going to make you money for every year you're going to be live. So if you're 30, hell, if you're 50, you still got another 30 years for this to make you money. That's a long time. You got to think long term. So I would personally zoom out and I would look at that month over month chart and I would map out the last 6 months. How have I done? Not positive, negative if you're new, but improvements, losses. That's what you need to do. That's what you need to do. There is a spreads channel. That's what Bull does, man. I'm pretty sure there is one. If it's not, then Pookie's just working on pushing it live, but I know we have it. I want to say we do. Hold on. Oh, that's it. You got to get in that PB Advance, baby. You got to get in PB Advance. That's where we got those the wheel channel. That's where we got all those spreads coming out. So message me and we'll talk about it. Oh, dude, I love LT too. She's taking a little time off. I'm sure she'll be back at some point or another. She's got a little time off here, but I'm sure she'll be back soon, some point. Either way, she takes the time she needs, man. She's always been here. She's always crushed it. I just want her to take the time she needs to take. Google. So restaurant term. I mean, here's the thing. It's Google. Like, it's Google. My dad and me were just talking about this. He's asking me, what do you think about Google? And it's like, dude, how do you not, like, as piss poor as the price action's been, and as much as there's been to the sell side, I would argue that there's still a good bit of value there, even resting at $89. I really think that if we come down to like 85, $86 on Google, I think that's a significant buy point. I think that you'll see a lot of buyer strength come in because that's historically been the demand zone between 83 and 85. However, if we can't hold above 85, then we might see some downside. And that, again, that's a macro market thing. Like if I were to buy Google, right? So like if I'm talking Google, it's long term. Like don't play around. You build into a position over time. I'd look at buying down, $83, $80. If it keeps going down, buying at 72, 70. Because when you're making purchases like that, you're thinking, okay, in the next 10 years, is this going to make me money? And I think the answer is probably yes. The only thing to keep in mind is that like below 83 is a pretty significant opportunity to see $50. So yeah, I take back what I said. I wouldn't keep buying it. That's not what I'm going to do because this is one that's been on my watch list and I've been very adamant and make sure I check in on it. But in all honesty, given this chart and just giving the nature of technology right now, I think people are scared that Google has lost its competitive edge and monopoly. Google's had a monopoly over the market. I mean, they still do. And as much as we could say, oh, I'm going to TikTok it, like it's not Google. It's just not. Businesses don't rely upon it enough, in my opinion, that it'll think about it. I do that for a living, right? So one of my companies does web development, SEO, blah, blah, blah. I still have to talk businesses that have been open for 30 years into doing a Google listing. Like that's been around for 10 years. So if you think that they're going to be super open to like, oh, I'll just go TikTok. No, they still fight you on Google. They're not going to do all that. They're just not. You got to think of the people as much as you think of the business. So when we think of Google, I think people are fearful. You got the chat GPTs of the world and all this other nonsense. It's not Google. And I don't understand why it would decrease Google's share value. Like it doesn't make that much sense to me. I get it. They're building into AI, but it's dumb. The one that I would fear for Google is actually the Zuck. Can't cuck the Zuck. He scares me. They just pushed through an acquisition that the FTC was trying to rule would create a monopoly, but they got it through. And it was metaverse VR related. If they do what I think they're going to do, and shit really does move to the metaverse, which is going to take a long time, guys, that could hurt Google in the long term. But again, you're talking about wide scale adoption of the metaverse, which is probably 15, 20 years off, just being realistic. Based on the tech we have right now, I just don't see it. We already live in digital worlds, but it's also, you're still social enough. Like, people are out in public, but then they're on their phone. Like, to them, it's still social. Like, to me, that's whatever. But to be like sitting there with the goggles and the whole deal, I mean, that's a whole thing. It's a whole different type of adoption. I would just be wary. So with Google, if it can't hold above $83, I'm probably going to stay away for now. And I'll be a buyer at 50, 60 if it comes down there. If it holds at 83, I'll be a buyer there, because then we're going to probably see some upside. There you go. You get to hear from the lady lion herself. Glad she's here. Oh, interesting information from Miss Kayla. For those of you that don't know, I would also highly suggest Thinkorswim. TD Ameritrade is phenomenal. This is a great question, and I'm going to shut it off after this. I don't care about it. It's extremely misleading. All they're doing is giving you dark pool data. It doesn't actually help you in any way, shape, or form. In my opinion, it's more misleading. I've seen more people lose from using it than win. And I did subscribe to it for like 6 months just because I figured, oh, it'd be great to know. No, it's, in my opinion, it's absolutely not. Some of the order flow alerts can be when you get like an extremely bullish signal triggered, but like, you also got to keep in mind that, like, unless those were like massive institutional purchases, you also got to keep in mind somebody else is writing those options thinking they're going to expire worthless. So in knowing that, are they building this position as a hedge, meaning they think the market's coming down and they're building a bullish position as a hedge? Or are they just selling premium? Or are they just padding somebody's pot? You don't know, and it doesn't matter. I think that dark pool stuff and like options flow, I think like that's the biggest scam that's ever come into this marketplace of financial publishing, in my opinion. It doesn't offer anything of value. It just doesn't. And most of those are operating illegally, just FYI. I mean, I don't want to get into all that, but there's a ton of legislation around that, which is why we've never done it. We thought about offering it as like a secondary service. But if I don't have you sign the NASDAQ and the NYSE disclaimer, which is a very long, detailed process of you giving me all your information, you shouldn't be looking at it, which means that they could be subjecting themselves to like hundreds of millions in fines, which is why we don't do it, because essentially they could fine me, like, I think they said it was 12 grand a person that's seen it every time they've seen it. So every options order flow that comes out, every person that's seen it, 12 grand fine, 12 grand fine, 12. I don't want to get into all that. And after I used a service that did it for 6 months, I realized, like, holy shit, I'm like, it's like paying to know, like, what are people buying the most at the grocery store? Think about it. What brands are people buying the most at the grocery store? Why is that going to dictate what I like? Does that make sense? Like, to me, that's the closest example I've ever come to. It's like, oh, just because somebody else is buying all this, I should buy it too? No. I think that they know how widespread that stuff is. Also understand it's a great money maker. Like, I got to give it to them. It's a great business. It takes no effort. You just really plug in some software and it's done, and people pay you monthly to get it. But it doesn't offer you anything of, in my opinion, intrinsic value or actionable information. It just offers you a shitload of info that's just overload, that's going both ways. Like, when those are firing, it's always an even scale. Like, they'll fire like bullish order flow, and then all of a sudden it's bearish order flow. It's like, what do you do with that? And like I said, is someone with a huge position to the downside hedging against upside, or what? What are they really doing? I mean, it doesn't tell you anything. I mean, if you had someone from Goldman Sachs calling you going, hey, we're taking a huge bullish position here, we're loving the 405 call on SPY, and we're going to take it at spot, we're going to put $80 million. Like, that's different, because that's an analysis formed opinion, an analysis that had become an opinion that had become a trade, rather than just watching other people's trades after they're done. and having no context as to why they work or don't. Does that make sense? Like you have no idea what their aim is. Because, for instance, talk about that Netflix short, right? People think I'm bearish on Netflix when they hear Netflix short. No, it was a hedge against a long-term position. It was protecting the downside aspect of risk on my long-term bullish position. But when you only hear that little snippet of what I said, you don't get all the context. And if you don't have all the context, then you're trading blind. So that's my rant on that. I hope that helps. Form your own opinion, though. I mean, if you find it useful, awesome. I just didn't. And lastly, before we wrap up, if you want to be a wonderful human being that supports a wonderful cause that literally helps families through the harrowing life of addiction, please take 2 seconds out of your day up until March 21st. And all you do is text the number 764 to 402 to the number at the bottom, 219-402-3836. It costs you nothing. You just text that code. Then when you're done, you text that other code, 266. 2 texts. If you could do that every day, I will love you for the rest of my life. Please help us win. It will greatly improve the quality of the services we offer by allowing us, hopefully, to get some grant funding finally. So I love y'all. I lost my voice, so I got to go. I hope y'all stay blessed now. Trade smart. We map this out. Follow the plan. Stay blessed. I love you.